Good morning everyone, welcome to Morning Markets on Thursday the 20th of February. Relatively short things today, a few topics that we found interesting at our morning meeting. One, we touched on the strength in the Chinese equity market. It's interesting to see with all of the headlines that we have around COVID-19 as it's now called, how that market has evolved. It's actually very close to recovering its peak that it had at the beginning of January, about 1% and a bit from achieving that. What's provided some more strength to the market today in China is primarily the pass-through of the reduction in the lending rate that the PBOC announced on Monday, which we touched on, and that's fed through with the commercial banks then cutting their interest rates, so supportive of business. As we have said, we think that the PBOC and the government in China will do everything they can to navigate their way through the dynamics of the challenges that this is presenting from an economic and a growth perspective. So turning now to the impact on the global economy from companies that are reporting, we heard from Maersk this morning, one of the largest shipping container operators. So all of those containers that we see moving about in the back of trucks, about 80% of those actually move in the sea first before we receive them on land. Maersk transport the vast majority. And interestingly, I suppose one of the things that we touched on from our China podcast is just the number of the busy ports in China. Maersk are flagging that trade out of China has been very weak, as you would expect, and they also say that they will see further weakness into March. But more encouragingly, they point to an improvement come April, which would be aligned with some of the data that we're starting to hear from other companies, but also how we've been seeing and observing the spread of the virus, or the reduced spread of the coronavirus within China and within Hubei in particular. Other things that we discussed this morning, a plug for something that we wrote last week. We wrote on the housing market in the US and the UK with good housing data from the US market last night, and that's a positive. Why is that positive? It speaks into the strength of the consumer that we've been discussing for a number of weeks. And then this morning we've had retail sales from the UK. They came in ahead of expectations. Again, speaking to something that we touched on earlier in the week, the strength or the ongoing improvement, I should say, in the UK economy relative to others, in particular Europe. That's all for today. Hopefully you find that interesting. We'll speak again tomorrow. Thank you.